Hello everyone, welcome to Ultimate Beginner's Guide episode 2. This is Kingmaker Trading. Today we are going to talk about candlestick analysis. I am Sankar, and in the first episode we discussed about the basics of Forex, and if you haven't watched that video, go to our channel and you will find that video there and watch it and come to this video because it will give you the basic knowledge that you will be needing to start trading Forex. Alright, if you are new to this channel, make sure you subscribe to this channel for some awesome educational content like this in the future, and like this video if you like it, and let me know in the comment section what do you think about my videos. Alright, let's go into today's content. First, let's talk about the history of candlesticks. Candlestick charting was first used to track the price of rice in Japan in the 18th century. Okay, the candlestick charting started to track the prices. Track the price of rice in the Japan, and it's in the 18th century. Much of a credit for candlestick charting goes to Munehisa Homma, a rice merchant from Sakata, Japan, who traded the Ojima rice market in Osaka during the Tokugawa shogunate. Alright, I think you understand that sentence, so I'm not going to bore you with the historical stuff. Okay, according to the Neeson, however, the candlestick charting came later, probably beginning after 1850. Okay, that's the history of candlesticks, and now let's move on. So now let's talk about what are candlesticks. Candlesticks are graphical representation of price movements for a given period of time, which means candlestick represent the movement of price, and it represent the price movement within a specific time period. For an example, if you take the 1 day chart or 1 hour chart, then one candlestick of the 1 hour chart represents 1 hour time frame and the price movement that happened in the market during that specific 1 hour. Alright, they are formed by opening price, highest and lowest price during the given period, and the closing price. Let's talk about this later in the video. Okay, if the closing price is lower than the opening price, then the candle is colored in red. If the closing price is higher than the opening price, then the candle is colored in green, which means if a candlestick opens in a price, and if it moves up and closes in a higher price than it opened, it's colored in green. Or else, if a candlestick opens and it moves down and closes below the price it opened, then it's colored in red. Okay, in financial markets we call upside movements bullish and downside movements bearish. I'll explain why we call that in the next video, which is market structure, the Ultimate Beginner's Guide episode 3. So for now let's move on. Now here is the graphical representation of how a candlestick is formed. Alright, now we can see, let's say if I'm sorry, if price moves like this, it goes up, goes down, up, down, up, down, up, down, and this movement of price during the specifically given time period, let's say that time is t. Okay, and you can see the highest price that market reached during this time period is at this point, and the lowest price is at this point, and the opening price is here and the closing price is here. Okay, and this market movement is represented by this candlestick. You can see the highest price and the lowest price and the opening price and the closing price. Okay, and since this market movement is happened during t time, I'm sorry, the t, you can see that this candlestick represent the time of t. Okay, hope that makes sense. All right, now let's talk about parts of candlestick. For a green candle, the price opens at the opening price is below the closing price for a green candle, because green means it's bullish movement, right? Upside movement. For in order to be a green candle, the closing price must be above the opening price. So for a green candle, this is the opening price and this is the closing price, and this big square area is called the body of the candlestick, and these lines to the downside and upside, they are called wicks, and this part is called the upper shadow and this part is called the lower shadow. Okay, and here is the representation of a red candle. For a red candle, the closing price must be below the opening price. So for a red candle, this is the opening price and this is closing price, and these lines are wicks, and you can see that red square area, and it's the body of the candlestick, and this is the upper shadow of the candlestick, and this is the lower shadow. Okay, all right. Now let's talk about candlestick types. There are two main candlestick types to know. They are green candles represent increment of price and they are called bullish candlesticks. As I said before, a red candlestick represents decrement of price and they are called bearish candlesticks. Okay, I will explain to you why these candles are called bullish and bearish in the next video. Okay, now let's move on. These are the candlestick names, or as some people call it, the simple patterns of candlesticks. All right, now we can see, let's start from this point. These candlesticks, doji candles, a candle where the opening price and the closing price is virtually the same. And you can see in this picture that opening price and the closing price of this candle is virtually almost the same. It can be a green candle or a red candle, it doesn't matter. It just the opening price and closing price should be virtually the same, and it can have a wick either to the downside or the upside. Okay, to the both side to be exact. And if this type of candle is formed, then it's an indication that after this candle the market is going to rally drastically. That means if this type of candles are formed, then you can expect a huge movement of the market, okay, after this candle. Now let's move on to the second candle. These type of candles are called marubosu or marubosu, whatever. They are Japanese names. I don't know how to exactly uh, pronounce them. Okay, a long candle with no wick to the upside or downside. Okay, you can see in the picture that these candlesticks have no wicks, right? These type of candles represent the strong price movement. If you see a green candle like this, that means bulls are in the position of the market. If you see a red candles like this, that means bears are owning the market at that time. Okay, now let's move on to the third one, the dragonfly doji. Opening price and the close price of the candle are at the top of the candle. You can see in these pictures that opening price and the closing price are at the top of the candle. So if this type of candle is formed, then it's an indication that at that specific level buying pressure is present. So it's probable that after a forming of these type of candles, market can go upside. Okay, the next candlestick name is gravestone doji. Opening and the close of the candle are at the bottom of the candle. You can also see uh, these pictures. Opening price and the closing price are at the bottom of the picture. This candlestick is the opposite of dragonfly doji. So if this gravestone doji candlestick is formed, then it's an indication that there is selling pressure present at that point in the market. Okay, now let's move on. Next one is hammer, a candle with considerably long wick and small body at the top of the candle. You can see these candles in the pictures as well, and these are more similar to the dragonfly dojis, and these candlesticks are also indicating buyers present at that time in the market. And next type is inverted hammer, a candle with a considerably long wick and small body at the bottom of the candle. You can see that candlestick formation also in this picture, and it is similar to the gravestone doji, and it represents the selling pressure in the market. Big green candle, a green candle with a considerably large body and a small wick. Okay, these type of candles often formed in a trending market. So if this type of candle is formed, it means there is high momentum in the market to the bullish side. So it's possible that market will continue to go up. And next candle is big red candle, a red candle with considerably large body and a small wick. You can also see that in this picture, and it indicates sellers in the market, and it's possible that market will continue to go down if these type of candles are formed. Okay, I'm not saying that each time these candles are formed market will go like that, but it's possible, right? It's more than possible. It means it have a higher possibility. Okay, all right. Now let's go to our next part, which are complex patterns. Okay, the the first pattern we are going to discuss here is bearish harami, a green candle with unusually larger body followed by a small red candle. Usually, red candle contained inside the body of green candle. You can see that in this picture, this is a considerably large and it's unusually large green candle. And after that, a red candle is formed and it's contained inside the body of this candle. Alright, so if this type of candlestick pattern is formed, it means you can see a movement to the downside. It depends on how I'm sorry, the long the length of the movement. I got that right. The length of the movement is can be vary with the position of the market. This pattern is formed. That means if it formed in a resistance level, it's probable that it will go much lower. Okay, our next candlestick pattern is bullish harami, a red candle with unusually larger body followed by a small candle, a small green candle. Usually green candle is contained inside the body of red candle. This pattern bullish harami is the opposite pattern of bearish harami. You can see that in this picture too. And if this type of candlestick is formed, it means that market tends to go in the bullish direction. Okay, our next candlestick pattern is bearish engulfing pattern, a green candle with small body followed by a large red candle. You can see that in this picture a small green candle is here, and after that a large red candle is formed and it closed below the wick of this previous green candle. This is an indication that market will go downside, and this is very powerful indication that happens very often in the market. Okay, the next pattern is bullish engulfing, a red candle with small body followed by a large green candle. You can see a small red candle is here. After that, a large green candle is formed and it's closed above the wick of this candle. This is the opposite pattern of this bearish engulfing, and this is also a very powerful buying indication. Okay, very powerful bullish indication. Okay, now let's move on. Our next pattern is tweezer top, formed by two or more candlesticks with matching tops. Candle bodies, wicks and color may vary, which means for the tweezer top pattern, the tops of the candles should be the same. Not exactly the same, maybe a tick or few ticks difference, but virtually they should be the same. Okay, it can be two or more candlesticks, and if these type of candles are formed, it means market will tends to go to the downside after the formation of these type of candles. Our next pattern is tweezer bottom, formed by two or more candlesticks with matching bottoms. Candle bodies, wicks and color may vary. That means for the tweezer bottom pattern, we should have some candlesticks with the same low point. All right. uh, if these type of candlesticks are formed in the market, it means the market tends to go to the upside after the formation of these candles. Okay, now the patterns aren't finished, but I can't explain everything in a single video. So if you are interested in these candlestick patterns, you can uh, go to Kingmaker Trading website and check out the PDF I have created for you guys, and it's available for you absolutely free. So if you want to check it out, it's listed in the link down in the description. Okay, now let's talk about candlestick math, or sometimes this called candlestick blending. Let's say you see these two candles formed in the market, and then you can add these candles together inside your mind, and that will give you this inverted hammer candle, which indicates what? Right, bearish movement in the market. All right, you can see that to add these candles, you have to just cut the larger candles body to the equivalent length of the smaller candle. This colors may be vary, okay, but the wicks and all heights and highs and lows that reached during the period remain unchanged. Okay, you can see that much, this adding thing much clearer in this graphical representation. Okay, not only this, but also we can add candlesticks like these. So a small candle like this followed by this candle and this candle. If we add these three candles together, then we get this huge green candle, which indicates the high bullish movement in the market, and it's high momentum, obviously. So you can see that the body of these three candles are added together to form the body of this big candle, and highs and lows remain unchanged. All right, now you will probably be wondering, is it real? So why wait? Let's check it out. All right, if we look at this chart, it's euro dollar chart, and it's this chart is the present chart that available at this moment, and you can see each time market reversed, it showed a showed a reversal. There is a candlestick pattern that we just discussed, and let me point them out for you. Here market reversed, and you can see a inverted hammer, right? Here, what's here? You can see a gravestone doji, and what is here? This is a candlestick pattern we just discussed about, and I don't remember the name. It's let's see, what is it? It's harami. All right, yes, it's a harami pattern, bearish harami pattern. Okay, and here market reversed, and there is a gravestone doji and a hammer candle. Here we have a gravestone doji and bullish harami. Okay. why this video is getting so much long. And you can see that here a gray, I'm sorry, yes, it's a gravestone doji, and you can see a bullish engulfing pattern, bearish engulfing pattern. Okay, you can see this type of marker, candlestick formation at almost every market. Okay, so that's it for today, guys, and now I think you have pretty good knowledge about candlestick reading, and if you are interested in learning more, go check that out, check that PDF out, and you can learn more candlestick patterns in that PDF file. If you want to check that out, it's listed in the link down in the description. And if you enjoyed this video, please like it and let me know in the comment section about what what you think about this video, and subscribe to this channel for more future contents like this, and see you in the next video.